Why are we seeing that more rosy outlook, that better outlook? Is it because your longer-term plan is delivering, or is it because the operating environment is getting better?
Well, I think we're making progress. The company is making progress. You know, 23 is an important year because it's halfway through our strategic plan. And our strategic plan was really about, you know, point number one, positioning Valeo on the trends, the mega trends of the industry. And we made in the last 2 years extremely clear choices. It's about electrification, it's about advanced driving assistance, and it's about software. And it's paying off. You know, looking at our release of yesterday, we said that we could secure in 22 and 23 70 billion euros of new orders from our customers. This is 2 times our sales. So that shows that the technologies that we have, the products that we have, are you know, exactly what the market needs. And now in terms of profitability, what was extremely important is, you know, to go through step-by-step improvement. We could achieve our guidance in 22. We could achieve all elements of our guidance in 23. And we disclosed yesterday guidance for 24, guidance in 25, showing step-by-step improvement.
Okay, so that's the improvement that you anticipate and you hope for. Christophe, good morning. Obviously a lot, and you mentioned electrification. Obviously your sector very much focused on that transition right now. We have seen a bit of a slowdown in the EV space. What's your expectation for how that plays out?
Well, you know, everybody talks about, you know, EV slowdown. When you look at 23 numbers, the market has increased 30% when it comes to the number of EV cars. So the growth is still extremely spectacular. We know the endpoint. The endpoint is that the car is going to be electric. We know as well that, you know, the road to this endpoint will be potentially bumpy, but it's not changing the endpoint. So we are continuing, as far as Valeo is concerned, to focus, you know, our research, our development in bringing good solutions, good systems for the EV, and to make the EV more affordable, which is extremely important. And that's what, you know, a company like Valeo is doing on a daily basis, optimizing, reducing the cost, improving the performance, so that the EV gets better and the EV gets cheaper.
Thinking about these low-emission powertrains then, we heard from the Renault CEO recently, back at the Geneva Auto Show, I think, talking about how a supplier could maybe become part of their Horse joint venture. That's a joint venture on these kind of powertrains with Geely and with Saudi Aramco. Would you be interested in joining that kind of JV?
Well, no, I don't think it's, you know, on the agenda. But what is the agenda? On the agenda is really to work as partners with our customers. And you mentioned Luc Ademio, you mentioned Renault. Actually, we have an extremely important project together, Renault and Valeo, to co-develop, to co-design, and to co-produce the future electric motor of EV cars, which will be the best motor ever in the industry, more affordable and more performant. So it's not in the form of a joint venture, but it's in the form of, you know, a partnership, a co-design, and a co-production.
Christophe, Creedy in London, talk to us a little bit about kind of the lower cost piece of the equation you were just talking about in terms of cutting jobs, in terms of cost efficiency, even in terms of facing any sort of risk from the Red Sea and the implications on your supply chain. What does that look like?
Well, we're not really seeing any disruption from the Red Sea. You know, the ships are taking 2 weeks more to get from China to Europe. And, you know, this is just now in the planning. This is, you know, taking into account by our supply chain teams. You know, the supply chain teams have been extremely resilient over the last years. They've been crisis after crisis after crisis. Probably the most severe of them was the electronic shortages, you remember, 21. So we're not seeing any disruption from the Red Sea events, actually.
Are you seeing pressure, though, from car manufacturers, for example, to push those costs lower? What does that relationship look like?
Well, you know, looking into 23, we could mitigate the impact of inflation. And we did that, on the one hand, talking to our customers and trying to find the right prices, and on the other hand, by reducing our costs. So it's always about price and cost. Our results in 23 that are better than what they were a year ago is showing that we could mitigate, the impact of inflation. And going forward, looking forward, we're going to apply exactly the same recipe. We have discussions on prices with our customers because there are still some inflation, especially on labor, but we are as well having some self-help measures, some cost reduction programs in order to mitigate, at the end of the day, the impact of inflation.